Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe and positive out there. Today is a dividend stock portfolio update, ladies and gentlemen. I've been dollar cost averaging into some pretty high yielding ETFs. My dividends are going through the roof, and I'm seeing some pretty nice growth as well by dollar cost averaging into these ETFs as well. All right, so I'm going to get into everything. Make sure you stick around to the end of the video because it's quite fascinating. Massive shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. If you are new to the channel, make sure you smash the subscribe button down there. Turn on that little bell notification as well, because as you can see right here, I love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. We are just getting started. Also, if you can give this video a thumbs up, watch it straight through, it would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you find, ladies and gentlemen, do that. All right, so give it a good old thumbs up. Doesn't cost you anything. It's absolutely free. Thank you very much. You guys rock. Also, little disclaimer, I am not a financial advisor. Please do your own research and due diligence with this stuff. I do not want to see anyone get financially hurt. That is why my number one golden rule is I only invest what I can afford to lose. And yes, we don't like to lose. You can lose money like that in the blink of an eye in any kind of investment, all right? So please be careful out there. Do your own research and due diligence. This video is for educational and entertainment purposes only. All right, ladies and gentlemen, the formalities are out of the way. Let's get straight into it. I'm going to show you my brokerage account right here. I use Stake here in Australia. I'm not sure if it's available overseas, but guys, there is a referral link below to Stake. Please feel free to use that. You will get a stock in Dropbox, GoPro, or Nike. All right, it's quite hard to get Nike, by the way. Just putting it out there. You will most likely get a stock in Dropbox or GoPro. Anyway, let's get straight into it, guys. On the day, on Friday, because obviously the standard traditional markets are open Monday to Friday, I had a loss of $427. 0.94%. And also, guys, I noticed a lot of stuff happening with Bed Bath and Beyond, whatever it was called, and I did try get into that pump, but obviously I lost out a couple of hundred USD, and I got out of it just in time before it absolutely crashed. So again, I got out around $17.85 a share. Now it is down to like $10 to $9. So again, I'm glad I got out of it. Anyway, moving on, I've got portfolios sitting at 45,000 USD. Again, it's climbing quite nicely. I've had a total return of 22.36%, which is $8,225. I do have dividends being paid out in there, and you can see that $5.48. But I'm going to go through some pretty crazy stuff. Now, I have been dollar costing averaging into Qyld. Where are you? Right here, guys. And again, you can see right here, this is a covered call ETF right here. And the reason why I'm so bullish on this, guys, is because of the dividend yield sitting at 11.65%. It is an incredible dividend yield, guys. And basically, this is only meant for income. All right, it's not meant for growth. I have got my other stocks, aka SPHD, VOO, VTI, all of those, index funds. These now are producing monthly cash flow for me, so I'm incredibly bullish on them, all right? But anyway, let's have a look. So sitting at $18.15 a share. It doesn't move much with stock price. This is mainly to do with monthly income, okay? So I'm sitting at 117 shares right now. Of that, $2,129 US. You can see right here, guys, I'm going to read this right here. The Global X NASDAQ 100 Covered Call ETF, QYLD, follows a covered call or buy right strategy in which the fund buys the stocks in the NASDAQ 100, aka the tech stocks index, and writes or sells corresponding call options on the same index. The Global X NASDAQ 100 Covered Call ETF, QYLD, seeks to provide investment results that correspond generally to the price and yield performance before the fees and expenses of the CBOE NASDAQ 100 Buy Right V2 Index. Anyway, so it's a covered call ETF in simple language right there. And again, I'm mainly invested into this, building up my position because it's generating monthly income. All right, 11.65%. The current dividend is around 18 cents a month per share. So it's around about $2 something per year. All right, so again, it's really nice. I'm just slowly building on my position in this. The other ones I've been buying, of course, are obviously the other Global X funds right here. And if I go down, this is XYLD. currently at $43 a share. 10.65% dividend yield. Again, this is getting into some crazy levels. Equity at the moment sitting at 923 USD. I've got 21 shares of that. And again, the fund seeks investment results that before fees and expenses generally correspond to the performance of the S&P 500, so the top 500 companies. Stock covered call index. So again, it writes covered calls on the S&P 500. So they do hold a lot of good quality companies, all right, as well as Qyld, because they're mainly tech stocks in, you know, Apple, Microsoft, all those big companies. Anyway, so I am invested in XYLD. Obviously, the other one here is RYLD. And let me bring this up here, guys. So let me just bring it up here. I do currently hold a position in this as well. This is another Global X fund at $21.01 a share. A dividend yield of currently 12.06%. And again, I've got $1,082 in this. I have 51 shares. Again, the dividend yield is insanely high, and all of these three funds pretty much pay me every single month. All right, so this is why I'm doing this. And again, the Global X right here invests in the Russell 2000 covered call ETF. So the Russell 2000. And obviously you can see here, exchange traded fund incorporated in the USA. The fund seeks to track the performance of the CBOE Russell 2000 buy right index. Okay, so again, this works on the Russell 2000. A lot of companies in there. All right, so again, RYLD, QYLD, and XYLD, I have been incredibly bullish on, slowly building up my positions because it's going to generate me income a lot sooner. Because I'm about 34 years old, you know, I need to start thinking seriously about income-producing assets, and this is the reason why I'm bullish on those. And of course, you can see all my other stocks. I do have growth appreciation as well. The other one here is JPEI. I think it's JEPI. Let me just go down to it. This is the JP Morgan Covered Call Index ETF as well. JEPI, you can see here, guys. Now, the benefit of this one particular, this covered call ETF right here, it has the benefit of growth, all right? So it has a lower dividend yield, you can see, of 9.38%. However, in the last 3 months, you can see it's had growth in the stock price, whereas the other ones do not grow in the stock price. So again, I'm looking for the dividend income. I'm an income investor now, all right, full blown. You can see right here that this has had an increase in the stock price itself. And if I go to the last year, sorry, the 3-year chart, it has had a 15% return in the overall stock price. So again, in 2020, you can see it was $50 and it has slowly been climbing up, all right? So nearly $60 a share. So you're getting the benefit of the high dividends every month from JEPI, which is JP Morgan. However, you're also getting the stock appreciation in the price of the stock. So that's two best of both worlds. So if you're looking for that, maybe consider this one as well. So I'm looking for income generating assets, all right? Now, other ones here, obviously, that I found, which is really risky as well, but it's actually CLM right here. This is an insanely high dividend yield stock, 20.53%, Cornerstone Strategic Value Fund, and I have invested around $925 into this. I currently own 89 shares. Again, this is not to do with growth in terms of stock price. This is purely about monthly dividend income. I'm going to have a quick read of this, guys. It's quite long. Cornerstone Strategic Value Fund. The fund is a closed-end, diversified management investment company. The fund's investment objective is to seek long-term capital appreciation through investment primarily in equity and securities of the United States and non-United States companies. The fund invests in various sectors such as information technology, healthcare, consumer discretionary, financials, communication services, closed-end funds, industrials, consumer staples, and exchange-traded funds, ETFs, materials, real estate, and other fund investments in companies of all capitalization ranges. The fund invests in common stocks and also invest in preferred stocks, rights, warrants, and securities convertible into common stocks that are listed on the stock exchanges or traded over the counter. The fund also invests without limitation in other closed-end investment companies and ETFs. The fund investment manager is Cornerstone Advisors LLC. And you can see right here, guys, that dividend yield is absolutely insane. I did see this and I threw some capital in it and I've just seen an explosion in my dividend income, all right? So this does pay monthly as well. And to be quite honest, it has had a stock appreciation. Look at that. It's up 14% in the month, all right? So again, it was on the earlier, you can see here in July, $9 a share. It is now sitting at $10.33. So again, we'll see how this one goes. It is quite risky as well. But again, I do look for those high dividend incomes right there. All right. So that's pretty much what I've been buying. And of course, when I get dividends paid out, I reinvest them, such as SPHD. I did buy more stocks of that. Enterprise Products Partners. Again, you can see right here, guys, because again, that's a high dividend yield, stock right there in relation to midstream company, oil and gas transport. And again, I've had some pretty crazy returns on that. 7% on the month, on the year. It's up 24%. So I've been dollar cost averaging into this as well. I currently own 85 shares of this, $2,302 USD. The yield is sitting at 6.96% as well. 6.96%. Anyway, I'm losing my mind here. My tongue's getting twisted. Anyway, that's pretty much what I've been buying. So QYLD, RYLD, XYLD, CLM, and JEPI. All right. So they're the four the companies that I've been dollar cost averaging into. Let's go to my dividend tracker right here. And again, my dividends have increased quite nicely, guys, like literally probably about $300 or $400, if not more. I'm now sitting on an annual dividend income of $3,195, sitting on $266 a month, $8.76 per day. That's not bad. I can buy about 2 coffees with that. Yield is about 5.84%. And I'm due to be receiving a dividend from NSC as well at 32 cents. Now, these are my top dividend payers, right? Look at this. ExxonMobil pays me $540 a year. That is quarterly. QYLD pays me $452 a year. That is monthly paid out. Not every month, but this is split up over the 12 months. SPHD is still up there at $290 a year. That's monthly. CLM, now that's the one I just mentioned before, Cornerstone Strategic Value Fund, pays me $271 a year, split up every single month. EPD pays quarterly, $235. RYLD, XYLD, you can see they're both monthly dividend payers, $214, $158. Realty is sitting at $156 a year. That's monthly as well. AT&T is $141. That is quarterly. Prospect Capital is literally, dead for me. It hasn't done anything in terms of capital appreciation, but it's paying me $109 every single year. Their dividend has not increased for a very long time, mind you. But that's pretty much it in terms of my top dividend payers. I have increased by 1% to 3%. Anyway, so I've got a goal of $100,000 in dividend income, which is pretty crazy. I would need to invest $1.6 million in Australian dollars to get $100,000 a year. That is easily doable if I focus on it. Literally and put a lot of my capital and spare change into this. I could probably hit that mark, I don't know, maybe in 5 years. Probably 5 years or less if I really focus on it. It would need a lot of money, but 5 to maybe 10 years. We'll see how we go. I'd really like that, guys, because $100,000 a year would be very comfortable. All right, it really would. So I'm due to receive $177 in dividends this month. Now, let's get some crazy stuff right here. You can see here my portfolio has now jumped up to $66,000, $11,000 in returns right there in Australian dollars. Now, what I like to do about this is go straight down to the bottom of this app, and this is Div Tracker. I'm not affiliated with them. I just found this because I was sick of using Simply Safe Dividends because of their $360 charge per year. So I found this app and it's working quite nicely. Anyway, 10 years, my portfolio is going to be worth $141,000 and it will pay me $13,991 a year. That is madness. That is if I do not reinvest any of my personal money and just use the dividends and simply reinvest them. That's what the portfolio is going to be valued at. Now, where compounding really comes in, guys, if I go to the 20-year chart, look at this. $747,000, and I will be receiving $136,000 a year in dividend income. Now, $136,000, let me just go here, guys. Divide that by 52 weeks. That is $2,615 per week. All right, $2,615 a week in income. Completely passive. All right, that is just insane. And if you go to the month, let me just do that right now. 136,000 right there. Divide that by 12 months. It's $11,300 a month in income. This is what I'm talking about right here. I don't have to worry about real estate taxes, maintenance, owner's corporation, meaning like body corporate to look after the property if you're an investor in some sort of an apartment. I don't have land tax on this. I don't have to worry about council rates, stamp duties, all this stuff. All I'm simply worrying about is income right there. I mean, $11,000 a month, that's the dream. That will happen in 20 years, but I need to speed this up. I need this to happen in about 5 to 10 years max. All right, so I need that 136K to go in that time. So this is why I'm so heavily focused on this. And if my cryptos go parabolic, which they will in the next 5 to 10 years, I'm putting it straight into ETFs and index funds, because this will generate cash flow for me for the rest of my life, my family, my daughter, her family. It just keeps going straight up. So that's why reason why I'm so bullish on it. And you can see here, guys, now I'm now up to $263 a month. Big dividend months for me are going to be coming up, guys. Obviously, you've got here September's a big one. December's a big one as well. And it's just going to slowly increase. You can see June is now $400 a month. So that's pretty nice as well. But that's pretty much it, guys. That is the main game right there, guys, to get the portfolio to $136,000 in annual income. Completely passive, all right? This is the dream. Officially now changed my strategy. I'm going after high dividend yields right now to get that income start flowing right away, guys, because, you know, time is ticking. That's pretty much it for my stock portfolio. Let me know in the comments below if you have any questions. We'll speak to you all tomorrow. Stay safe. Have a good weekend. Peace out, guys. Bye.